Hey, good morning, Paul.
Good morning.
Good morning, Michael.
Morning.
Good morning, Waynel.
Hey, it's afternoon
Rhymes
yet?
with?
Afternoon yet?
Yeah. So we're back doing these silly shows Monday, Thursday, Monday, Wednesday, Monday, Tuesday, and Thursday of every week. And we're only going to do them really if they're relevant. When we have, we're not going to just sit here and go, yeah, so I like eggs. We're not going to do shows like that anymore, even though this one's going to be close to it.
We're going to talk trade deals.
What kind of trade deal are you talking about? Like, we talking like sports trade deals?
I was thinking about American trade deals.
Oh, well, we could do that. Mike's here. He's Mike Mish is here from One Trust Home Loans. He is tariff free today. So, how about the cinnamon ball here, dude?
No, I'm good.
These are
I know you love
delicious.
those.
I do.
I know.
You have one, Wayne.
No, I'm good.
See, I'm safe with these because I know nobody likes them.
Yeah.
So,
Except for Canova. He's the one
yeah,
that
but he doesn't
starts
eat them
all
like
this.
I do.
He's the one that feeds them to you, doesn't he?
And yeah, he is. Yes, he is.
A lot of red dye in those.
Yeah.
Also,
DYE,
Yeah.
not DIE. So what are we doing today? We're talking about mortgages. What's going on with mortgages in the world of mortgages?
rates are not as low as people want them to be, but I think we're probably going to see them stay in this range. And I thought this time last year, I thought by now the rates were going to be substantially lower.
Yeah, I remember you saying that.
I figured they'd be mostly because I thought the economy was going to be so bad, because generally when the economy gets bad, the rates go down. So I had thought they would probably be mid fives. Looks now more like you're probably going to see them stay mid to high sixes throughout the rest of this year. They could have some times where they drop lower, but I was reading something that it said since about middle to the end of 2022 until now, so we're coming up on almost 3 years. The average, with except for a couple times, rates have been between 6.5 and 7.5. So that seems to be like the new normal. There's times where they went up to almost 8. There's a few times where they went down closer to 6.
Yeah.
But I think that, if the economy stays the way it is and trade deals happen and the economy does, well in terms of jobs and things like that, and inflation stays down, I don't think we see rates get under 6 for a couple of years maybe.
So what kind of trade deals affect the mortgage industry?
I mean, in terms of trade, like if there wasn't any trade deals and the economy started to really sputter, they just announced some type of pause in the tariffs with China. We had a trade deal last week with Great Britain. So if those things start to work themselves out and the economy, stays fairly decent, there's some job losses within the government, but if those jobs get absorbed in the private sector, inflation, doesn't look like it's too bad, then, you probably won't see rates go down. If trade deals didn't get announced and the economy around the world started going towards a recession or a depression, then you'd see rates get better.
It's interesting.
Yeah, so the trade deal you just mentioned with China, they paused it for 90 days. And they dropped them down to 10% each. Dropped them 115%.
Really?
So they're down. Tariffs are down for both,
and
down
we're doing
10%.
30 on theirs.
Yeah, I think.
No, I think
China-
the deal said they're
big
both
time.
down at 10%. Us and them, 10% tariffs.
Yeah, they
for
didn't have
90
much
days.
choice, because if you look at some of the stuff that was going on in China, a lot of the businesses are going down, big time. A lot of factories were shutting down because no products were being sold.
Yeah.
So a lot of them were going up bankrupt as a result of that. So you knew there was going to be something that was going to happen. So, but everything we get comes from China.
Pretty much.
Yeah.
Pretty much. Even mortgages.
Yeah.
No?
Well, they buy U.S. Treasuries.
So kind of.
So does Japan, though.
Yeah.
Japan's actually a bigger buyer of U.S. Treasuries than China.
And they're talking. So
Yeah, Yeah. I mean,
Everybody's talking about
I
it.
know you're not part of the Florida thing, but I heard Florida's going down the tubes.
New England right now is probably the most stable housing market in the United States. So where we're licensed, we do as a company, we do a lot of
You're
joint.
talking about your One Trust
One
home
Trust.
loans.
We do a lot of joint ventures with like national home builders. So they have a good pulse on where kind of new construction is and things. Other parts of the country, obviously, and we've talked about it on the show about planning and zoning and what other states allow for building.
Right.
So during COVID, states like North Carolina, South Carolina, Texas, Florida. I mean, the amount of housing that they built was phenomenal. I mean, they built it fast and quick, and brought it to market. That's also causing an issue now because in some of those areas they've overbuilt it. So certain parts of Florida, you have areas like West Palm Beach and Naples and things that are still pretty doing pretty well, but there's other parts where there's an oversupply, and because of rates, there isn't a lot of buyers. So you're starting to see prices flatten out. Like you can see it in the news where people will freak out about it and say, "Oh, there's a imminent crash coming because house prices in the Midwest or Florida or whatever are going to drop by 10%." It's like, well, they went up by 50% from 2020 to 2025. So if they drop by 10, it's not really a crash.
Yeah, but a lot of people bought those houses for big prices, and now they're even worth the crap.
Yeah.
Yeah, just like happened here, what, 10 years ago? Yeah.
Well, it's still going on here. My wife's a real estate agent, so
Yep.
she sees houses go up and they're in bidding wars or they're snapped up like that. Anything that's decent.
And under about 400,000 for a price range, because that's what most people like. If you look at payment wise, what something in the 300,000 to 400,000 range is what your average person would have for what would be considered like an affordable or normal mortgage. And you also can't bring generally that price range of house to market anymore. If you're a builder, you can't really build something with land and sell it for 300, 350,
Right.
375. It starts kind of at 500,000 and up
Yeah.
in most cases.
Knowing a couple of people that were looking and they bought in our neighborhood, they were looking over $500,000.
Yeah.
Easy.
That's
And it was getting to be too expensive. And it was getting well beyond their, budget. So
I think in the next 4 or 5 years, a starter home in southeastern Connecticut will be 500,000.
Wow. That's a lot. You don't flinch, though, I noticed.
What are you going to do? It's built. It's the cost of building. It's the cost of materials. It's the cost of labor. It's mostly the cost of the state regulations for what the state says that you can do to bring land to build. You know what I mean? The towns want these subdivisions. They want roads. It's expensive. So
I mean, I'm constantly getting stuff from people who want to buy my house.
Yeah.
All they want to do, sell your house, sell your house.
yeah,
God,
sell your house. Yeah,
leave me alone.
yeah. Then I got to buy something.
right.
Yeah.
I have this, I don't even know who it is, but I get a text message, I don't know,
Oh, I get
every
them too.
month or two,
Yeah.
or,
Yeah.
want to buy my house for cash.
Yeah.
So I told them, I said, 500,000, it's yours.
Click.
Yeah,
There you go.
from.
Right.
Yeah.
And he texted me back, or she, or whoever, and said, well, my offer is based on market value minus repairs. And I went, oh, okay, well, my offer is based on what I want to get out of it. Click, crickets, so
Oh yeah.
that was it. I'm waiting for him to, because this person has a few times
I get those.
has reached out.
I
I mean, what do they do? They're just looking to flip a house, right? Basically,
I mean, generally,
buy it cheap and
yeah, a lot of those places are looking to buy, a distressed property for whatever. Maybe the person can't make the tax payment. Maybe they don't have the money to fix it up. And they might send out 100 of those or 1,000 of those. And if they get one out of every 100 or one out of every 1,000,
Right.
and it's a really, and you went to them and said, hey, look, like I'm out of work. I'm hard up for cash. I want to move out of the area. What will you give me for my house and close in 7 days? Somebody's going to buy it at a discount. They're going to turn around, do something, fix it up, turn around, sell it at a premium.
Yep.
You know, it's like if you sell something, you know, and take your time and sell it to somebody, or if you brought it to a pawn shop, they're going to give you a discount on it
Of course.
at a pawn shop, and and knowing what the value of it is, and then they're going to turn around and resell it and make a profit.
Wait,
It's business.
nothing. You got anything? You got anything?
No, it's business.
Yeah.
What he's talking about is just typical. You know, they're just going to throw a bunch of stuff out there and see if they can grab one.
Yeah.
That's it.
So how long do you think that you know, from the trends that you're seeing with Connecticut being, or New England being one of the more stable markets in the country, when does that level out? I mean, what's the curve usually?
I mean, it's hard.
5 years, 7 years, 10 years?
You know, there's always things that you can't, you know, really predict or say what's going to happen. You know, if something happens with the defense spending and they have massive cuts to General Dynamics or EB, and that takes out their hiring or adding of new subs or whatever it is, the sub base, you know, shutting down or getting smaller with defense cuts, all of that stuff. I mean, that's all stuff that's possible. Until I've said for a long time since I've been doing construction lending, until Connecticut, Mass, Rhode Island, those three, you know, southern New England states, until something changes with the way those states are run, and especially in terms of like planning and zoning and bringing new housing, you know, to market,
Right.
I don't really see it ever changing.
Okay.
I mean, when you talk about area, you know, the way Connecticut is with their planning and zoning versus where it was 35 or 40 years ago, you could extrapolate that and say, well, you know, where we are now in Connecticut, California was 25 or 30 years ago. Look what's happened with California. As those regulations, the coastal regulations and all these different things, water usage, and not to say that they don't have a you know, a place to talk about and have those things brought up. But as government controls more and more of that stuff and limits the supply of bringing housing to market, it's always going to be, to me, a continued problem, unless you see a big drop off in population in Connecticut. Like if people start leaving the state and there doesn't need to be as much supply, then no. I think over the next 10 to 20 years, this southeastern Connecticut that I grew up in, or where you guys probably have grown up in, becomes massively unaffordable and ends up like a lot of more liberal leaning states, like a California or a New York, that's super high taxes. You don't necessarily get a lot of return on your investment.
Connecticut's not exactly low either.
Exactly. That's what I'm saying. And housing continues to be, you know, very expensive and continues to get more expensive.
Yeah, I think we're coming more and more like California.
Yeah.
We're the Eastern California state with all the regulations and taxes and everything else that they're coming up with.
Well, all depends if the legislature changes in Hartford. If it changes. Right now, it's
and with a lot of these towns, like the big thing with a lot of these towns, like you guys probably have it in Griswold, I know they have it in other towns around here, is getting these town planners. Because the town planners come in and they do the things that allow those towns to get more federal funding. Everything that we do as a state and as a country now is, how can we funnel federal funds from the federal government to what we want to do in our state or our town, instead of being like, all right, how about we not send all of our money to the federal government so they can disperse it? How about we just keep it locally so that Griswold or Lisbon or Canterbury and the taxpayers in those towns can do what's best for those people? Because what's different for this side of the state is obviously totally different for the other side of the
That's
state.
why it should be split in half.
It should be.
There we
He
go.
wants East Connecticut, West Connecticut.
Yeah.
Secession. He wants secession.
I want to split it.
Yeah. I mean, we could dump that side of the state to
Well,
Connecticut,
there you
to
go.
New York. There you go.
Damn right we
It's
would.
where the votes are. It's where
And
you
then we
get.
can join with
get the
Canada.
They can take Hartford.
They can have it.
Yeah.
Take the whole Hartford area, all you want.
Yeah.
Take those idiots with
But
you.
then we get Bridgeport.
No,
Can
we're
we,
not getting
can we
Bridgeport.
split
That's
Rhode
on the other
Island,
side.
like split it in half? We take southern Rhode Island, you know,
Yeah, I want the
Massachusetts
seafood
takes
part.
Providence County.
I want the seafood part.
Yeah, we'll take the Swamigan.
Yeah, all right. That's good. Canada's like, what do we get? Nothing.
Nothing. Not a thing. And we pay for it.
Huh?
They were paying for it.
Yeah.
Yeah.
So,
I mean, You talk about getting federal grants. I mean, I would think that because of our illustrious people in Hartford, a lot of those federal grants may be denied because of what they're doing. You know,
Yeah.
we're not going to get them.
Yeah.
We're going to have to rely on state grants. You know,
Which is great. I mean, the amount that the taxes would go up from that point. I mean, I just talked to, friends, family, people that I run across in the business that I'm in and stuff like that. And where people are politically and what they believe in is one thing. But when you have people from both sides, left and right, center, wherever they are, and everybody complains about, what it actually takes in this state to run a small business, you start to look at and say, well, it's a great state if you got a really big business that operates within the confines of Hartford. But if you're a small business and you just want to be left alone and not, have somebody constantly over you going,
Right.
What are you doing? What are you doing? What are you doing? Are you following the regulations? Are you doing everything right? It's a very difficult and expensive state to run a business. So you start to get to a point where, I've come across people recently that grew up down in this area. Now they run businesses in, let's say, New Hampshire or Maine. They have the work ethic of
Massachusetts.
Yeah, Massachusetts. They have the work ethic of Southern New England. We'll work 40 hours a week or more. You go to other parts of this country, they want to work 25, 30 hours a week or something. But you take a New Englander, you transplant them in the South or the Southeast or the Midwest, and they crush it in business because they're hard. They work hard and that's what they want to do. And it's sad that, it's so difficult and expensive to run a business in the state for a variety of different reasons: the environmental, the tax costs, the employment costs, all that different insurance.
it's unfortunate.
You got anything, Wayne?
No, it's just
Well, I didn't know.
it's all about shrinking big government, right? They don't want anybody. My wife ran a daycare out of the house, and towards the end, it was getting to be unbearable because of the oversight from DCYS and everything like that, and the requirements in the house and everything like that. It was just,
Yeah.
And they didn't treat her very well either. There's no respect there. So she basically just told them to pack sand and leave, and she quit because of all that stuff. So a lot of people, like you said, a lot of people are tired of that stuff. And a lot of it is you're paying for these people to do a job. And you got a lot of jobs out there in government. I've always believed that government has been way too big, and it doesn't need to be that big.
Are you saying that work ethic is different here than it is, say, down in Kentucky?
Absolutely.
Yeah.
I have friends that work in different industries, and if you go down into some of those industries where businesses have, maybe their headquarters down in Tennessee or Kentucky or whatever, you see huge transplants of people from New England because we just have a different work ethic in New England, I think.
Oh no, I agree. I lived in Arkansas for a short period of time. Couldn't wait to get the hell out. And no offense to the nice people of Arkansas, it's just everything was just so slow,
laid back.
It's a different mentality.
That's the culture.
Yeah, I know.
Yeah.
But even if you go from here and you're down to Stanford, and you live down Stanford, look at the environment. Look what's happening down there. They're going 90 friggin' miles an hour.
Yeah. Oh yeah.
And you can
Well,
look
they're just
there.
outside of New York City,
Yeah.
Yeah, but that's what happens. If you get out there, you say, "Holy crap! What's wrong with these freaking people?" And you're just 50 miles away.
Yeah.
So depends where you come from. So
Well, I think it depends on how close you are to New York.
and then those people they used to laid back.
They're more laid back down south, out west. Yeah.
Oh, absolutely. I mean, I used to say
It's
it
a
all the
lot
time.
less stress.
I used to say it all the time.
Look at the people in North Carolina when they had that big ass flood, right?
Mhm.
They didn't worry about the government coming in; they took care of it themselves.
If they were waiting for the government, they'd still be. I mean, there's still.
They took care of this.
They'd still be underwater.
Right. So I saw the Senate hearings last week. There's still unfunded claims from Hurricane Katrina that FEMA has.
So, it's a different.
So
Yeah.
I mean, if you're relying on the government and you think the government's ever going to help you, then it's a sad state of affairs.
I know that when I lived in Arkansas, it was a much slower pace. It was I'll do it today if I have time. And they weren't stupid people. Not at all. I mean, not any more stupider than we are, or
Mostly,
smarter than we
mostly
are.
more pleasant.
Yeah, they are very, very pleasant. But they also
Go at their own pace.
exactly,
Yeah.
and I think that's probably why if you have companies down there that need to, get things moving quick, they are going to bring people from the Northeast. Absolutely. So
Oh, a lot of people moving out of Northeast because it's cheaper taxes down there, and out west too.
Oh yeah.
It's cheaper to live. Even housing's cheaper.
Yep.
Oh yeah, and we're finding out every year, and we're on. What am I thinking of? Fixed incomes, right? So everything's going up every year, so it's getting tighter and tighter every year, right? So that's why I got to keep sending the wife out to work.
there you go. He's retired.
Retired.
Should be retired.
Never retire.
I'm never going to retire.
I'll never be able to.
Nope. All I need is a microphone and some good Wi-Fi. That's
There you
all I
go.
need. So what's next? What's going on that you can see? What's the next big thing? Big thing, I guess, for as far as the mortgage market is concerned, or the real estate market? Because I know homes in this town alone, as soon as they get put up for sale, boom, they're gone.
I think you
They
probably,
get swallowed up in a hurry.
as long as rates stay, I've always thought that like the 5% to 5.5% range, and I've read stuff on it where they've surveyed people and people that have those rates from COVID, the 2 to 3%, 4% range.
Yeah.
5% to 5.5% is kind of that area where people can find it palatable to give up a 3 or 3.5% or 4% and go buy that next house, list their house, go buy something else, and have it be where they like make peace with it. They can, you know what I mean?
Yeah, part ways.
Right. You're like, I really don't want to
They've
give up
justified
that.
it in their own
right.
head,
They've
yeah.
justified it. When rates stay above 6, 6.5, 6.75, 7, you just have people that no matter what will not, and in many cases cannot afford to sell their house, because you could have somebody that they owe $250 on their house and it's worth $400. They could take that, sell that house, take the $150,000, put it down on their next house if they're buying something for $550, $6. So they're not necessarily financing a lot more, and their payment, goes up by $1,000 or $1,200 or $1,500 a month because the taxes are more, the insurance is more, and the rate is double what they might have. I talked to a couple people recently that
3.5 opposed to 7.
Yeah, talked to a couple people recently that have 2.25, 2.5 on $200,000, $250,000, $300,000.
Circa 1981.
No, circa
1991.
No, try 2021.
from 2023, 2024, they have those rates. And so if they're going to give that up and go buy their next house, do they, they have to it has to be like they bought the house and it was a 1-bedroom condo or a 2-bed, 1-bath ranch, and they were single, and now they're married with 4 kids and they have to get out.
Yeah.
Otherwise, people will hold on to that and
Yeah, it's cheaper to just add on.
Or just not do anything, because if you're financing more, you're doing more, and you're adding to that payment, what those low rates did for that time period is it allowed people that, as things have gotten more expensive, because their mortgage payment is so low, they can still go out and spend the things that they want to do and live the life that they have. 2 cars, a couple vacations, dinner 2 or 3 nights a week, shopping, all that stuff that as Americans, we're all entitled to, that we talk about, that American lifestyle. If they get rid of that house with that low rate, now all of a sudden, yes, on paper they can afford it, but they have to maybe go from 2 new cars to a new car and a used car. They need to go on maybe 1 vacation a year, and it's not a flight to Disney World. It's maybe, 2 or 3 days, somewhere in New England where they drive to it and they stay over with the kids. Not to say that's a bad thing, but that's what, and generally when people, as I'm sure you guys have seen in your lifetimes, when people get accustomed to living a certain way, it's usually something. Oftentimes, it's only something catastrophic that happens. A job loss, a foreclosure, a bankruptcy
right.
that rattles them from that. Hey, you can't keep spending like this. I think that's not throughout just our culture or through the American economy, but all the way through the government and everything like that. So it'll be and whether that gets better or worse as the baby boomers, age out and die off. I don't know.
Yeah. So we have
not so soon.
The greatest generation's pretty much gone.
Well, yeah.
The generation before the boomers.
For the boomers, yeah.
The ones that won World War II.
I'm not even a boomer.
What do you mean?
I'm not a boomer.
No, you're just after.
I'm a latchkey kid.
So what are you? Are you Gen X?
Yeah.
What year were you born?
66. I just missed it. 65 or
65 to 80 is Generation X, right?
66.
66 to 80.
Yeah. I just missed it. Boomers are just before me.
Nice.
Yeah, I'm not a boomer either.
You're just old.
Yeah, I'm not a boomer because I'm 81.
You're 81?
Yeah.
Jesus, I would have thought you were in your late 60s.
See? Right?
Yeah.
How many times have I told you that?
Yeah. He's 81.
Shocker.
I'm in my 60s.
So then you're part of the
I
greatest.
thought you were 81.
You're at the very tail end of the greatest generation.
Very tail end.
Yeah.
He's at the tail end, all right.
Doesn't look so great, does it?
Hey, you had a good run, right?
Yeah, still does.
Keep it going.
Still going, yeah.
Oh, he's
You
going
had a
anywhere.
great run, Paul.
If we thought you were actually going to go somewhere soon, we wouldn't say this, but, you got at least another 8-10 months.
So I tend to think, and the Fed said they aren't going to do anything with the rates right now, but I tend to think once the dust settles for all the trades and the tariffs and all that settles, I bet you in a year or so you'll see them drop a bit. I think you'll see them drop a bit once you get a little more
He tried
consistency.
to get the guy to drop the rates, and he told him.
He said no.
We didn't know. Yeah.
See, so that's two different types of rates too. Like a lot of times the average consumer hears, Jerome Powell is in a pissing contest with Trump, even though Trump put him in there. They don't really get along. They don't like each other. And, Trump can say stuff, but he could never really actually, it would be catastrophic. And I'm not a believer in the Fed. I think the worst thing that the country ever did was when the Fed was created in 1913. Mm-hmm. But you can't remove him because we're so...
He has to resign.
Yeah, he has to resign. So he's got about one more year, and there's a guy that is wants to remove some of the political part of the Fed being out in front, which started with like Greenspan and then went with Bernanke and Janet Yellen, and be more of what the Fed was, which was kind of stay out of the limelight and just focus on inflation and jobs and not having huge swings in the American market. But the federal funds rate is what, the overnight rate that the federal government lends to banks when the banks need to borrow, for liquidity things. The mortgage rates are more based off of mortgage-backed securities, which is like the sale of mortgages that Fannie Mae and Freddie Mac do.
Are they still around?
Yeah,
No,
they're
no.
still in conservatorship, and they
Yes,
make
they
a
are.
ton of money.
Yes, they
and
do.
all that money goes right into the Treasury, which is why they've talked about getting them out of conservatorship, because it's kind of like
What does that mean?
So conservatorship means that they're private entities, quasi-private, semi-private, that have a private portion, and yet they're government controlled. And so because the government
So
took
the
them,
entire world.
in some ways, yeah. So because the government took them over when the market crashed in 2008, they're under the guise of FHFA, which is the Federal Housing Finance Authority, which controls Fannie and Freddie. And Bill Pulte, who his family, Pulte Homes, is a national home builder. Trump just put him in to kind of oversee Fannie and Freddie. And they've just done a lot of things that have made it more difficult for the underwriting process of things, making refinancing more expensive. And when they do these things, they end up making more profit. And when they make more profit, if they were private entities, that money would go back to shareholders or a variety of different things. What's been happening since 2012 is all the money that's been made from Fannie and Freddie from the government insuring these mortgages and packaging them has gone directly into the Treasury. And the last time I checked, I think it was something like, and I could be wrong, but it was like $380 something billion they've profited in the last 12 years. And that's just gone right into the government coffers. And then so you look at it and you go, well, they're making money off the mortgages of the U.S. citizens. Where the hell is this money going if it's going to the Treasury? And now we've seen over the last 90 days, money that's been going into the U.S. Treasury just goes right back out with no oversight. You know what I mean? Wherever you fall politically, you know, you probably know if you write a check out of your checkbook where the check goes.
They don't.
The government has no idea. They have absolutely. I think
No,
it was
they're working on that.
I think it was $5 trillion in payments in the last year that they have. The government has absolutely no record of where that money went to. They have no codified way to tell if that money went to legal sources, where it went, or anything like that. Which I think to me
It really didn't
is
change
insane.
much. Because before it went federal, it was going in other people's pockets.
Yeah.
You know, before the crash, because they all came up with a bunch of fake mortgages and gave them to people that couldn't afford them.
Yeah, and that was all.
It collapsed upon itself.
Hmm.
That was a mess.
That was all pushed in the early 2000s by Wall Street. All those type of loans, and then the government came in and bailed them out.
Big banks.
Yep.
So how can people get in touch with you, Michael?
Call my cell, 860-884-2103. How do you get in touch with me?
Same way.
Call or text.
You didn't text you.
Yeah.
Siri. Text Michael Mish.
What do you want to say to Michael?
What's up, boy? No review? It went to you.
Oh.
I think so. What's up, boy?
Hasn't come through.
And it picked up the ha 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 too. So apparently.
Oh, that it did. Yep.
Oh, that's the only one that went through. Okay.
Yeah.
But anyway, that's how I get involved with Michael Mish. But 860-884-2103. It's on your screen as well. For what are the, if you want to list all your products that you offer personally?
Residential mortgages. So for refinance, for purchase, renovation, construction, that's
That's where you're at.
that's where I'm at. Single family to 4 families, anything in that scope.
Then it's all you.
Trying. And I work with good people.
So what was the award? Why don't you tell people about the award you just won?
I got the chairman's club for the company I'm with now.
For One Trust Home Loans.
Yep. So that was I was top 4 loan officers in the company.
Wow. Out of how many? 4.
Out of 4, I came in 4th. It depends because the way you look at the company, we have like a retail side, but then they also have joint ventures with the big. So I think all told, there's maybe 350 or 400 loan officers.
That's good company.
Yeah, and then I because of my volume from last year, I was in the Scotsman's Guide, which is like a financial magazine. It was like top 1% in the United States.
Oh,
So I had a good year.
right here in Northeastern Connecticut.
Yeah.
All right, Mike, thank you very much. We'll see you
Always.
again real soon. I will see you because we got more paperwork to do.
Yeah.
Crap. Wayne, got anything?
I'm not going to see him, but hey, good luck.
Yeah. Thank you.
Oh, I do have one question, really,
Yeah, what?
for the two retired guys. Do you see any benefit at this point in or stage in your life? Really, you're in different stages, really, of selling your home and moving. Because we talked, you mentioned about Connecticut, being,
Yeah.
I don't see any benefit in me selling at the moment.
Yeah.
I mean, as long as I can do the work around the place, which I do.
Yep. I meant instead of moving, not just selling the place, but getting and moving out of Connecticut.
Oh, well, at my age, probably not, because everybody's here. like you said.
Right. Okay.
Mhm.
I'm too freaking old to start over again.
Yeah.
You know.
Wayne.
I have 2 granddaughters that live 10 minutes away. We're going nowhere.
Yeah.
If they weren't here, we probably. My wife has even said she grew up here. I didn't grow up here, but she grew up here.
Yeah.
You know, born and bred Connecticut, Eastern Connecticut. And,
If I didn't have, if Benny wasn't here, or I
Yeah.
would.
that's the only reason we're here, because right now the taxes and the cost of living here in Connecticut.
Tennessee.
Or you go down south, where it's cheaper,
Yeah.
to live, and you could stretch your dollar farther down there.
Yeah.
Well, yeah. Isn't it kind of relative though?
I mean, New England's
Wages are relative.
if you take out all the cost stuff, I mean, New England is a phenomenal place to raise a family. You have the mountains, you have the ocean, you have seasons, and,
Yes.
and it's
Yeah.
enjoyable and all those.
We're not complaining about that. We're
No.
complaining about just the cost to
I
live
think
here and the
most
taxes.
people, if you ask them why wouldn't you leave, like you just said, and why wouldn't you leave the area? There's probably 2 answers: job and family.
I think the benefits here, far for myself, even for most people that I talk to, and that's probably why I asked the question, is that the benefits far outweigh, of whether I'm picking up and leaving, just staying here. So of all the people that complain, bitch, moan, blah 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 about how bad Connecticut is or New England is, they're all staying.
Yeah.
Like Whoopi, she didn't move to Canada, did she? So,
Right.
So I think the benefits far outweigh.
If you have the money to afford the lifestyle that you'd like to live, or you do live, it's a great area. If you don't have the income to provide the life, then it can be very. I can see where it could be difficult.
Sure.
To make ends meet.
Right.
I think it can be a struggle.
Right. Anything else you want to add to this today?
Good.
All right, we'll be back tomorrow once again on Tuesday morning. And thank you, Mike, for coming in from One
you.
Trust Home Loans. Again, his number 860-884-2103. And also, just want to say, Mike also sponsors and supports athletics here on SNSF Sports. So thank you for that. So good guys do that. So anyway, thanks, Wayne.
Hey,
Thanks for coming by.
See you later.
so come in tomorrow.
I didn't
You coming
talk to
in
you
tomorrow?
yet.
No, I can't.
No.
Is it still on?
Huh?
Is it still on?
Yeah, we're still on.
No? Yeah.
You want to drop an F-bomb?
No, not yet. No.
All right, we'll see you tomorrow. Thanks for joining.